Hello, I'm joined today by Dan Scovel, who's going to discuss Intel with me. Dan, welcome. Intel stock's done very well this year. Do you think it's got further to go?
Short term, I think there's some risk. I think as a company, I think it's a great company. They're always going to make money. They're going to be able to support shareholders. I mean, this is a machine that generates cash at a $50 billion a year run rate. Now, that having been said, I think some of the optimism in the stock this year has been because of some marginal improvements in the PC business. Now, the PC business at Intel, that's like 2/3 of their revenue stream. So that's a big part of their business. And in fact, PCs earlier this year looked like they were doing better than expected. Now, the problem is it's difficult for me to get too excited. The PC business overall is fairly stagnant. We were expecting the units to shrink 6%, and now maybe they're only going to shrink 2 or 3%. Yes, that's incremental upside, but I don't know that that's enough excitement to want to write home about. So I think Intel as a company over the next few years will be very stable and very profitable. It will be nice to its shareholders. In terms of growth on the revenue line, I think that's going to be tricky. They just have too much exposure in the PC space.
Does it have an opportunity to lever into the world of tablets and smartphones?
It has an opportunity, and it's attempting to do that. But realistically, those are single-digit percentage of revenue, and they're late to the party. I mean, in fact, tablets have, in some ways, already been played out. We aren't seeing a whole lot of growth this year out of tablets. By next year, it could be tablets have gone from zero to 60 in 5 minutes. I mean, it's just like you turn your head there. So they're late to the party. Now, I think to Intel's benefit, they have a new management team there. They're making investments in wireless technology. They are moving into these other markets. They're looking at Internet of Things. They're looking at a variety of different things beyond the PC and the data center. The biggest thing that Intel has going for it is in the data center. It's the servers. In the new era of the Internet of Things or smart things, the cloud, i.e. the server farms, that will be a very viable piece of that ecosystem. That's 25% of Intel's business. It's growing, and that's where most of the profits are generated at Intel. So they will continue to do well there. The rest of their business is mostly PCs, kind of stagnant, probably not going to go a whole lot of places. And those other opportunities, they're clearly making investments because I think they know in a few years' time they can't not have some wireless technology. But it's going to take several years, number one, for this new era to emerge, and number two, for Intel to be able to participate in it. So again, it's a great company. Profitability is wonderful there and will continue to be, but their only strong growth trajectory at this point is in the server space.
So you see it as an investment, as a mature dividend-paying stock in the future?
At this point, yeah. I think there's some opportunities in the future that may emerge, but they're going to be held down by the PCs. But I think the server business will keep this company viable, although growth at the top line will probably be a little challenging for some time here.
Dan, thanks very much for joining me. If you'd like to know more, please look at our website.